Welcome to the Market Enthusiast podcast, where Good Life's Noah Brooks, Chief Market Strategist, and Chris Needs, Senior Research Analyst, break down today's topics, covering their impact on the economy and personal finance in a fun, easy-to-understand way for investors of all levels.
Welcome back to another installment of the Market Enthusiast. I'm Noah Brooks, and obviously Chris Needs is with me.
Hello, hello.
Okay, here's where we're going to start today. Don't call it a comeback, right?
It is a comeback.
It is a comeback. We are now flat for the year on the S&P 500 after being down on the closing numbers, down over 17%, and intraday down almost 21.5% shortly after the whole tariff kerfluffle, if you will. It has been one of the biggest rally backs that we have seen, in terms of time frames, almost ever.
Reversed a 15% drawdown in less than 6 weeks, which is there's only two instances since 1950 that I could see, and the other was 1982. So
yeah,
epic comeback.
Epic.
It is a comeback.
It is a comeback. Now, we are not back at new all-time highs yet. I think everybody knows that. But most investor accounts are back where they were in November, December. Mm-hmm. And everybody's like, okay, feeling a little bit of relief. I mean, there was dire angst, including myself, right? On that Monday morning, we opened up down pretty dramatically, and everybody thought it was the end of the world. A lot of times there are good reasons to be opportunistic in that point, but I think everybody thinks back to I know I do. I think back to 2000, 2001, 2002, and you think, well, is this just the start of something bigger, and therefore I shouldn't be buying the dip? It turns out, again, we're not back to new all-time highs yet, but if you
up
were
22% off those April 7th intraday lows.
Yeah. It's been nutty. It's been just, off to the races. And some of that had to do with the pullback on the tariffs. Obviously, we had, a 3,000 point up day on the Dow Jones after the tariff relief. But I mean, nothing's really changed dramatically. Yeah, that tariff relief has come. We have not seen a plethora of deals come through, and yet the market really wants to go higher.
Yeah, I mean, everyone was talking about whether it was unethical and whatnot. The Truth Social post from Trump on the 9th, right around when market opened, where he said it's a great time to buy. And look what the market's sort of done since then. And you know what? Not getting into an ethical discussion or not, but think about what that said. Prior to that, do you remember, Lutnick and everybody was saying, oh, he doesn't care about the market right now. This is necessary to correct long-standing issues. We don't care about it. We care about the bond market. Well, the bond market thrashed that night, and then he did a turnaround, and then basically admitted it's a great time to buy, saying, see, I am looking at the stock market, and the market has responded and got the president's vote of confidence, and it's been quick.
Yeah. So I guess there's probably some morals in there, investing morals, that is, right? Not, and maybe some ethical morals. I don't know. But investing morals is, most of the time, buy the dip seems to work.
Unless it's 2007 through 9, or well, I guess in 2009 it did work. 2007, 2008, or 2000 to 2002.
I mean, I think it depends on what your time frame is.
Yeah,
right. We're not day traders, we're not daily investors, things like that. But in terms of buying the longer term dip, yeah, it seems to work. And even in 2009, it works. In 2000, 2001, 2002, the returns were -9, -11, and -22. And you can make a case for even buying the dip back then. It depends on what your time frame is and what your cash is. If you're an investor and you need that money to produce income, buying the dip may not work over that 3-year period. Right? That sequence of returns doesn't necessarily work for you. But if you are a long-term investor who is not looking for income over that 3-year period, you made out just fine if you bought the dip. And I think I think it really comes down to, you can buy the dip. We were talking about this the other day. You can buy the dip on a market, right? On a large index, whether it's the S&P or mid caps or Russell 1000 growth, it doesn't necessarily matter. You can buy the dip on the market and you won't get destroyed. You can't necessarily say the same thing about an individual stock.
Yeah.
Right. Today,
By definition, you're significantly concentrated when you do in single stocks rather than on the index. So totally makes sense that either you're going to be really happy and really benefiting off that or really hurting.
Yeah. I cut my teeth during the internet bubble, and, to be able to buy S&P 500 when it's down 10 or 20% is a gift. When you have an individual stock, back in the day, it might have been JDS Uniphase, or it might have been Lucent or Commerce One, and you see a stock down 50% and you think, oh man, this is a great buy.
Was Commerce One Jamie Dimon's company?
No.
Who did JP buy out? That he was the CEO of the one they bought out, and then he basically ended up moving into CEO of JP.
Commerce One was a tech company.
It was another bank, but it was like Commerce.
Yeah,
Bank,
Commerce One was a fiber optic and tech. It wasn't financial services. But either way, buying the dip on an individual stock, not that it doesn't work, but it has the opportunity to
burn you.
Buying the dip on the market itself, S&P 500, let's call it, depending on what your time frame is, historically speaking, you've always made out okay.
Mm-hmm.
You need, if you're an investor taking income, you need a little bit more cash on the sidelines if you're in a buy the dip mode. Yeah, no question about it. Looking at some of the other markets, S&P, like I said, flat right now. Today we're recording on Thursday, the 15th, I think it is. S&P flat for the year. Mid caps are down a little bit, 2.5%. Small caps still down over 7% for the year. On the other side of that, highlights Europe, Asia, Far East, the EFA index up almost 13. Emerging markets finally rallying year to date, up 12. And the big winner as far as international goes, or I guess the big winner in general, Europe, right? Mm-hmm. Up almost 17.5% year to date. And they came out of the lows on April 7th, a little bit better than we did. Obviously, year to date, they're better than we did. But from the bottom, they're a little bit higher than we are. And they're getting a lot of traction.
Yeah, we talked last podcast about the leading countries in the country ETFs, and the leader is still Poland. We actually had one of our advisors down in Florida. He went to Poland for a week. So interesting. He was there with everything going on in Europe. I mean, it hasn't been too crazy, but the stock markets are ready to go. They want a peace deal. They're happy to have all the flows that are staying in Europe now based on, our geopolitical stuff going on. But you know what? International's just been strong, and they outperformed over the first 4 months of the year by 16% compared to our S&P 500, which is the largest outperformance ever.
Yeah,
in a 4-month period to start a year.
Yeah. Well, like I said, a diversified portfolio working again. Mm-hmm. Bonds working a little bit, international working a little bit. So, truly a diversified portfolio is making people smile, especially when we were down on those lows a few weeks ago. As far as some of the other things, we always talk about growth versus value, growth stocks versus value companies, the dividend payers. They're almost equal year to date. There was a pretty wide delta between those two earlier in the year, almost 9%. And now value's up about 1.5% for the year. Growth is basically flat for the year, depending on
Mag 7 has been very strong since that April 7th low we've been talking about.
Yeah,
super strong. They've been pulling the weight since then.
Yeah, although Amazon's not really feeling the love.
Yeah.
I mean, when you look at the amount of stuff that they import, right? I mean, I don't know what the exact number is, but when you buy something on Amazon that it's from China.
I think over the last 5 years, Amazon is the worst performer of the Mag 7.
Oh,
no.
I
think Google's second. I think it's either Tesla or Google second worst, but some of those majors that you're used to world beating, when compared to their colleagues of scale, aren't necessarily crushing it.
Yeah. Nvidia was down to, would you say, 91,
Yeah,
right?
always a buy in the 90s for me, but that's for me personally. That's not a recommendation, and it's come back again.
Yeah.
That big weight that they got off in China, that really helped, and now there's deals going on in the Middle East where we're going to give them, apparently allow them to purchase the top end chips. So Nvidia is getting a little bit of a breath here.
So obviously we've had this big rally back with the markets, but economically speaking, things are working pretty reasonable. We had CPI come out earlier in the week, and we were down to 2.3%. So just keep in mind that's the rate of inflation, right? So it means simply that prices are rising at a much slower rate than they have been rising, in the past. Since COVID, really. I mean, since the beginning of the end of COVID.
2.3% year over year versus 2.4 expected. Core was at 2.8, which was in line, but the 2.3% year over year is the lowest since February of 2021.
Yeah. And again, I always tell people, right, it doesn't mean that prices are coming down. I mean, there's certain prices that are coming down. What did you say? You called out frozen fish imports?
Yeah.
Coming down a little bit.
Frozen fish and coffee and gasoline were sort of the notable ones that were a little bit higher. But yeah, across the board, almost everything else is very reasonably coming down.
So the other day, came home and I was by myself. Ailish was going to join me the following day, and I'm coming from the airport, and I stopped at the grocery store, and I'm just going to buy something. I didn't feel like making anything, so I go to the back to the freezer section, the deli section, and I thought, well, maybe I'll do one of their pre-made meals. You know what I bought?
What?
Frozen fish.
Oh,
fish sticks. They were so good.
As long as you don't heat them up in the office, I'm cool with that.
Well,
that's a party foul.
We don't have a microwave, so I use an air fryer for a lot of things, and that was just perfect. And I hadn't had a frozen fish stick in, I don't know, years.
I made an awesome chicken parmesan alla vodka at home the other day in the air fryer.
Okay, the air fryer.
Yeah, it's just easier to get the
crispy.
Yeah,
I like the old school fried in oil.
Alexa's grilling me on my alla vodka sauce addiction that I'm on right now.
That's the cream that makes it not so
amazing.
Red, huh?
Yeah, amazing.
Okay. So I feel like we shouldn't move any further without talking about Warren Buffett, right? So I'm sure I would expect everybody that's listening to this knows who Warren Buffett is, the Oracle of Omaha, one of the most talked about investors in the land for the last 40, 50 years. I got involved investing in the early 90s. And people were raving about him then, and they certainly haven't stopped. So this past Saturday at the annual convention or annual conference for Berkshire Hathaway, he said he's officially stepping down.
You waited until the last 5 minutes to do it, though. He didn't let that overhang on the conference. It was just like a side note at the end he threw in there.
Well, I mean, the fact of the matter is it's like your 93-year-old grandmother passing away, and you're not surprised, right? So he's 94, and he has set himself up with chief investment officer and people that are going to take over. I mean, that's been in the works for the last 10 years. We've been hearing about that, but he has officially stepped down from his role at Berkshire Hathaway.
He'll still be the chairman, right? So he'll still be around, but he's not going to be in the day-to-day. He's going to be like the soothsayer that comes in during market turbulence, who, he's not afraid to hold on or to buy in difficult scenarios where maybe Greg Abel faces his first bit of adversity and Warren just comes in there, just pats him on the back. No, you want to buy here.
You think that's what it's going to be?
Yeah.
I mean, listen, there are so many statistics about Berkshire Hathaway. I'm sure you have 5 or 10 that you want to throw out here. I think in the end, he gets a lot of praise for some of the quotes. When the market goes down, people start throwing around Buffett quotes, and I'm also guilty of that, right? But back in 2008, when the markets were, let's say, rough, right? Berkshire Hathaway was one of those companies that was doing the buying, When long-term capital management went belly up in 97, 98, Berkshire Hathaway was one of those companies that helped loan them money. In the 2000s or the late 90s, when everybody was buying technology, they
Not
weren't.
Warren.
Not Warren Buffett. They were buying Burlington Northern Santa Fe, right? The railroads. They were buying Geico. They were buying, Coca-Cola, McDonald's, those types of brands. And it's one of the things, I mean, we can talk a lot about Warren Buffett and give a lot of statistics, but I think in the end, what it really comes down to is that Buffett and Berkshire Hathaway didn't care about short-term performance against the benchmark.
Yeah, I think that goes to, since he knew himself so well, he could control biases, and he didn't have the ego that you see a lot of these people do. So like in the 2010s, my favorite lady, Aunt Kathy Wood with ARK Invest, she was just crushing Buffett by like 10,000%, maybe not 10,000, but some ridiculous number. And everybody's dragging Warren. Oh, he's a dinosaur. Oh, he's lost it. He can't even beat the S&P 500 anymore. Aunt Kathy's the future. And, he didn't bite in that. He didn't, besides Apple, he never really made major tech purchases. And that was one of the best purchases
besides
ever,
Apple, right? Like, that's one of the best American companies that we've seen over the last 25 years.
Yeah.
When Steve Jobs was hired back in, I think, 99, 98, something like that. I mean, I'm not going to get into the if you bought them then type of thing, but if you're going to make one tech purchase as an investor over the last 25 years, might as well be Apple.
Yeah.
Right.
But the whole point being is he just didn't chase things. Like, he wasn't comparing himself to Jim Simons or, all these other people out there. He was just doing his thing, buying good companies. And we were talking about earlier today, it started back in the 50s and 60s where he'd be probably scouring, the 10Ks, all the actual accounting information of companies. And he was like that kind of market nerd, a fundamental guy. And, he went from doing the cigar butt style where he would get a dying company, just get that last puff out of them, and then unleash it, get all the value that he could out of it.
He's an original raider, huh?
Yeah, he was. And then he sort of progressed into, no, I want long-term sustainable companies, great companies at a good price type scenario. And it's worked out for him. Amex, Coca-Cola, he's held for 70 years now? Something like that.
Yeah.
Impressive.
Yeah. And I guess what I want to get our listeners to think about here is, what can you take away? Because there's a lot of things that Warren Buffett can do that a retail investor can't do. They can hold a giant portion of cash for as long as they want, and it doesn't really matter. They can go out and they can scour individual companies and read all the books, and individual investors can do that as well. But like, I want the takeaway to be, when people think about Berkshire Hathaway and they think about Warren Buffett, I want people to think that the takeaway from Buffett is that it doesn't matter about short-term performance. I think the quote that I break out every time the market's down, 20% is, and it's one of his most famous quotes, but it's be fearful when others are greedy and be greedy when others are fearful. I think that gives him the ability to not worry about the Kathy Woods of the world and what the moment of the day or moment of the month is. And your point about Kathy and technology and ARK and beating him by, leaps and bounds. And obviously we know what's happened there. I don't know where they are, let's say since 2020. I don't know exactly where they are. I would say they're probably...
The shine's come off a little bit, but hey, she's still doing just fine.
Yeah. But, the takeaway is that short-term performance doesn't matter, and you don't necessarily have to follow the crowd. Whether you're doing your own investing, whether a financial advisor is investing for you, you don't necessarily always have to be right where the index is. Mm-hmm. Certain things are going to work out in the end. And that doesn't mean that you shouldn't be cognitive of your performance and understand what goes into the attribution of your investments. But it means that you don't necessarily always have to be tracking the S&P.
just think about the Warren Buffett premium. We were wondering like how it would affect when he would leave. We've been talking about this for a decade as well. Well, when Warren leaves, which has to happen eventually, what's going to happen to the premium Berkshire has because of him?
Yeah.
And, you know, it was down, I think 6 or 7% after, which, but, you know, that's understandable. But to your point about he can do things that other people can't. What's Berkshire? $1 trillion company, give or take, on the given day about. And they had 330 billion of cash or cash alternatives on hand. 300 billion of U.S. Treasury bills. That's 5.1% at the end of last quarter of outstanding U.S. Treasury bills that Warren Buffett owned himself. So if you look at that capital structure with that much cash, no one else could get away with that. They'd be getting screamed at to apply that cash to the market.
Well, that's what I was saying is like, if you have people that are telling you have to be in line with the S&P 500 if you're an equity investor or 100% equity investor, and everybody's looking at you, whether it's monthly or quarterly, it becomes a lot harder to do your own thing, and you wind up just being a benchmark hugger, which isn't the worst thing in the world. I mean, a lot of people have made money hugging the S&P 500. There's no issue there, but it gives you the ability to kind of do what you want and not be forced into making trades or, in their case, acquisitions at the wrong time.
Yeah, short-termism is sort of the bane of every. You hear public companies complain about where they do things so they can meet goals on a quarterly basis that may not be additive on the annual or intermediate range. So he's never been afflicted by that issue.
Yeah,
which is a huge benefit for him, but he's earned it.
Yeah, absolutely. So I want to go back a little bit. We talked about, the overall economy. We had jobs report come out, still reasonably good. The expectation was 136,000 jobs being created. The number was 177. I don't, whether it's a blowout or not, I mean, it's still significantly better than the expectation. That gives us, I think it's since COVID, we lost about 22 million jobs during COVID. We gained all those jobs back. And then since we gained those jobs back, we've added 6.5 million new jobs in the last, I think it's 33 months. So we lost 22 million, we gained those back. And then since then, we've added 6.5 million jobs, 33 consecutive months of new job growth. It's pretty stellar.
Mm-hmm.
Pretty stellar. Now, we've had a few months that were, obviously everybody knows, that were revised lower, and we had 1 month that was, I think, under 50,000, but that seemed like a short-term situation. 33 consecutive months. This year we're averaging, I think it is 111,000 a month, which is only 4 months into it. But yeah, I mean, the market keeps going. The job market keeps producing jobs. The economy keeps producing jobs. Even with government layoffs last month, we still had 177,000 net new jobs.
Yeah.
And I think the key for the stock market is and spending, right? Everybody goes back to consumer spending. Is the consumer tapped out? I don't think the consumer is going to be tapped out until we see job losses.
Yeah, and the claims data hasn't spiked or anything like that. I guess we're still waiting on that to come through. I've been reading headlines, which is kind of funny to me. I find myself chuckling at it. It's like recession fears are everywhere except in the data. It's like, well, that's normally what matters. I mean, sure, everything's forward discounting, but yeah, hasn't shown up in the data at all yet. I'm sure there will be some blips coming down the line, but we've had significant reduction in tariffs, back to sort of 10% baseline. And in China, we went from 145 down to 30. They went from 125 down to 10. Based on where expectations had moved in early April and late March, I think we could sort of live with that range, honestly. And who knows if that's the final numbers. Certainly we'll find out after this 90-day pause. But significant positive movements on the inflation side to a point where if things would stay as they are now, I don't think we get a recession, even a mild one.
So the Fed's got to be still in this predicament, right? They think that there's a reasonably good chance that prices are going to start to increase because of the tariffs. Now, we haven't seen, so we've gotten this China situation. We have this pause for 90 days, but we haven't seen any other real deals. We know we're close on the United Kingdom, and I think we're close on Korea, and Japan is a little bit iffy, but we haven't really seen any hard data on those deals. You and I had said over the last month that the headline risk was to the upside. Do you think that that's changed at all now that we've kind of worked some of that stuff out?
I mean, the market certainly come back. So I think the impact from what we expected to happen with the positive headline risk won't be as large at these levels. But no, I think the risk is still to the upside. So when we do ink those deals, like I just saw a headline with, India in principle wants to extend a zero tariff deal. Whether we accept it or not is a whole nother thing. But that's still going to be a major deal. I mean, we were talking a couple weeks ago about India's place in things right next to China and relying on Russia for a lot of things, but now the world's largest country in terms of population and how important they are in this whole thing. And, if we could ink a deal with them, like you said, Japan, Korea, those are major things that the market will move on, even though we've priced a lot of it in at this point.
Yeah.
And I think that's what you were sort of getting at there.
You mentioned India. There was an article this morning that said the president had asked Tim Cook not to produce iPhones in India.
How come? To appease China? I think that's probably an ask coming from China then, because that's what they did. They literally airlifted iPhones out of China into India, where they have those new factories that haven't been, I would say, working out perfectly for them.
I read it to mean that he wants them produced here, which is
that's drastic.
I think it's a non-starter for Apple. People give estimates of what the cost for a new iPhone would be if they were produced here, and they're a lot higher. Mm-hmm. I doubt they're going to be produced here, but it's if the president doesn't want iPhones produced in India to appease China, isn't that our main goal, to kind of move away, take manufacturing out of China to be less reliant on China?
Yeah, no, I think you're right with that angle, is he wants to bring some percentage of manufacturing back rather than what I assumed was maybe after their conversations with China. Because if that news came out today, that's, about a week after he met with China and their delegation.
I think we should start nearshoring a lot more. I know we have this immigration situation with Mexico and Canada now. We have an immigration situation with Mexico, but I'd much rather to see our iPhones and our cars produced in Mexico, right across the border, right, 8 hours from like 150 million people, than in India or China.
Yeah. Just something I want to touch on quick about China is I think us in the U.S. have a slightly outdated opinion of the manufacturing there, that it's somehow low tech and that anyone could do it, and they're just like in a sweatshop. I think they've progressed beyond that. I think they have actual technological manufacturing expertise that we just can't get in a Mexico or a Canada.
I've seen a lot of videos. You run down that rabbit hole on your feed, whether it's TikTok or YouTube. I've seen a lot of crappy people working on the floor, in dirt floors.
Yeah, I'm not saying across the board, certainly, but I'm saying from a tech perspective, yeah, like Foxconn and some of those other ones, like it's not dirt floors at Foxconn.
No, they're clean rooms. Yeah. No, you're exactly right. I've never been to China. I'd like to eat my way through China without getting sick. I think that would be great. But to your point, the largest semiconductor manufacturer in China is gaining ground every month. Mm-hmm. With technology, and I don't get into this back and forth. Well, who has the best technology? I mean, for a long time, the U.S. had the fastest computer. We don't currently, if I'm not mistaken. And I'm not suggesting that China's going to, but at some point, is their economy going to grow enough to be the largest economy in the world? Probably. It's a population scenario. Right? India, although they have currently the largest population, I think
they're like China in the 80s at this point.
It's going to be
they have lots of infrastructure they have to build out so they can get to a global competition level.
Yeah. I think just gonna throw this out here. There's still about a third of the people in India that go to the toilet outside.
I knew you were going to do that.
I
this guy,
man, just gets. I wouldn't want to be there, or at least I'd want to be one of the really wealthy people that have toilets inside my house.
What's it with you and toilets?
No, I don't know. I told you a number of years ago, I was on a flight to London and I sat next to this guy and I asked him what he did. He said, well, I sell toilet bowl cleaner. I'm kind of getting back and forth. I said, well, where are you going? He said, well, I'm going to London here for a few days and then I'm going to Shanghai. And I said, oh, they sell a lot of toilet bowl cleaner in China. He goes, well, there's like 1.2 billion people and there's only 300 million toilets. So our expectation is that there's going to be a lot more toilets over the next, 10 years.
And if they have that shortfall, they need to clean those toilets a lot more frequently.
Right?
You're getting used a lot.
Yeah. What about manufacturing in like South America? Is it that we obviously we do get things from South America, but certainly not in mass like we do in China and Korea and Pakistan and things like that.
So they don't really have those industries there now. So I think it would be tough to just up and move and start again. But what did we do with the Panama Canal? Weren't they like Chinese immigrants who did the Panama Canal? What if we export some workers and move them to Brazil or Argentina?
Visiting Panama, what you see occasionally is you see this an Asian person, right? Full facial features of an Asian person speaking pure Spanish without any accent, Asian accent whatsoever, wound up talking to these people. And of course, their great grandparents or great grandparents came over to dig the Panama Canal or to work on the Panama Canal. And they've always stayed within their group, if you will.
Mm-hmm.
And so they're perfect Asian looking, speaking
kind of trippy.
Yeah, it's a little bit.
How long was Ailish's family down living in Panama?
I think about 12 years.
Wow.
Yeah. And we were only down once or twice, but yeah, they were there for a while outside Boquete. Interesting place.
I would go to Belize because they're English speaking. I wouldn't have to learn a new language.
Belize?
Belize.
Do you mean Belize?
Belize. Yeah. I get emails from like Remax from them for properties for sale there.
The only thing I know,
that's where I'll retire. They have good repatriation deals on taxes.
McAfee was down there. John McAfee was down there, right?
That's a rabbit hole right there.
Yeah.
Look into it.
Did you see that documentary, the McAfee thing?
I haven't, but I mean, I was always into the story, so I sort of knew the details. Still should watch it, though.
Yeah.
I should make Alexa watch it.
I don't know that you need to. All right, let's come back from this a little bit. So we didn't talk about the Slate truck, right? Have you seen the Slate truck?
Just the other day, I saw it for the first time.
Yeah. It's not out yet, right? So the Slate truck is a small truck that's backed by, my understanding is Jeff Bezos is one of the investors. It is supposedly made and assembled. On the website, it says in the Midwest. So
it looked kind of like the Ford Maverick a little bit, like very smaller.
Yeah. So that's exactly right. It's that same size as the Ford Maverick. It's basically a 2-passenger small pickup. It is not a monster. You are not going to be towing. You're not going to be towing a fifth wheel with this thing. So the towing capacity is about 1,000 pounds. The payload capacity about 1,400 pounds. It's really a 2-seater. It is stripped down. It has roll-up windows.
Oh, boy.
It has roll-up windows, which is a little bit strange. But they're saying that the base model is going to come in at about $20,000 for
if you have to roll up the windows.
Well, I mean, that's not like the hardest thing in the world.
It's not, but...
Okay, I don't necessarily want to get a roll-up window vehicle, but I grew up with them. It wasn't
nostalgic, right?
Yeah, it's not the worst thing. So they're saying that the base model is going to have about 150 miles range, not a lot. The upgraded model with the extra battery, 240 miles.
I forgot to plug in my Tesla last night.
Oh,
I'm like, oh crap! But I have far and away enough battery to get up and back without charging overnight. I only charged 80%.
Instead of plugging in, do they have wireless mats for the Tesla?
that's like a new thing out. Yeah, I think they do have a wireless charger process.
Because that would be great. You just drive into your garage and boom.
Not in my price point though, apparently.
Okay.
I upgrade to a second gen one that gets like 30 miles of charge per hour, and I'm more than happy with that. I don't need any faster than that.
Is that a level 2?
Yeah, level 2. That's what I meant. What did I say?
Well, second gen. Yeah, that's all right.
Yeah, level 2.
So 30 miles per hour of charging.
Yeah.
Okay. Overnight, you're good.
Yep.
Yeah. I like the mad idea though. My phone just died. I can't plug it in. Now I have to use the wireless.
Oh, your
charger.
USB?
Yeah.
Oh.
Yeah, it's a no-go.
That's a bummer.
I dropped it. I think I said to you, we were in Las Vegas last week, right? We went out there to see the Dead & Company at the Sphere. Guys, I'm telling you, if you're a concert goer, even if you're not a concert goer, and you have an opportunity to see somebody at the Sphere, or even just take a tour of it, they do daily tours. The Sphere is an experience like, I'm telling you, nothing else that you will ever see. It kind of reminds me a little bit, back in the day, we used to go to the planetarium. You remember the planetarium?
Well, when I was in elementary school, they had the one they would bring to your gym, and it would be right in your gym, and you go and sit in it.
Oh, I don't remember
it was
that
like all
one.
blacked out.
We used to go to the planetarium, I think, before we were of age, 16, 17, 18 years old. They would do the Pink Floyd shows and Led Zeppelin and some other things at the local planetariums. And it reminds me of that, except it's much larger. The scale, in a planetarium, it might be 100 people. I think at the Sphere, there's 18,000 people. So, if you're on the East Coast, you remember the Spectrum. So that held about 18,000 people. But like, you're all on one side. And then the entire building is just LED. And, you kind of get almost not dizzy. And I don't want to say dizzy, but
disoriented maybe a little bit, because it's so large.
It's crazy.
Encompassing.
Yeah. I mean, and going out there, first and foremost, Vegas is, I'm not a gambler. We spent all of 20 minutes playing a little bit of roulette. So we do not go to Vegas to gamble. We went out there specifically to see the Dead & Company. But Vegas is like it's like a make your own adventure. I mean, I'm a foodie, so of course we're going to eat. But you want to go hiking, you want to go helicopters. We spent a bunch of time at the pool. Spent a bunch of time at the pool. There's these signs all over the pool. So MGM Grand has this massive pool complex with a lazy river. First and foremost, I recommend it. If you like a lazy river, I'm a lazy river guy. I think it's a great way to spend the day. So there's these signs
with a $40 cocktail in your hand.
Yeah, well, yeah, something like that. But you're not driving, so it's okay. There's these signs all over the lazy river area: no smoking, no vaping. But when you go through the casino, not everybody's smoking, but there's definitely a hint of smoke in the casino. And Ayla says to me, so if you're a smoker, you can't smoke outside at the pool. You have to go inside to smoke.
Yeah.
That doesn't make a lot of sense. Hey man, I got to go inside, smoke a butt. What?
Very backwards.
Yeah. But it really is a make your own adventure place. And in terms of vacations, I mean, everybody loves to go to Europe. Everybody loves to go to the Caribbean. But you have like one situation. You go to the Caribbean, you're going to be either by the pool, you're going to be by the beach, which is a great vacation. Vegas, you spend the day at the pool. You go to a 4-star, 5-star restaurant. You go see a show.
Cirque du Soleil while you're there.
We didn't do any of the Cirque du Soleil. You know what we did see? We saw Carrot Top.
Blast from the past.
Blast from the past. I couldn't believe this guy. He was super funny. Honestly. I mean, I didn't know what to expect. I remember him from 20 years ago. The guy is 60 years old. Doesn't look so great. I don't know what he's been doing with himself, but he might have had some work done. He might not have. He's really buff. I think he's on the roids. Ooh. I shouldn't say that. Last time I saw a picture of him, he looked like he was on the roids. But I don't know. There's something about Vegas that's interesting. And from a non-gambler or somebody who doesn't go there to gamble, it's an interesting experience. The economy there, though, has got to be, you got, like, you can go and not spend a lot of money, but realistically, you're going to spend a lot of money when you go there.
Yeah.
Walking through, now we did reasonable. We were spending like for two people for dinner, just the bill itself, maybe like $210, which I thought is okay for a nice restaurant. But we were walking through the food court area, and there was, there's like a taco place, an Italian place, a few other things, 5 or 6 little places that you can go. That's not like sit down, right? It's more like a mall food court. But we stopped at the Italian place, and I'm looking at the menu. I'm looking up. So what do you think? What do you think a full pepperoni pizza costs? MGM Grand at the food court.
$28.
$52 for a pizza.
I mean, my beach club scenario that I saw when I was in Vegas a week and a half ago.
You were just there 2 weeks ago.
$1,685 for one handle bottle of Tito's.
But you were at the VIP section at a private club.
Yeah,
that's the bottle service.
Yeah.
You have to expect that when you go there.
Insane. I was thinking, you have a table minimum when you go to these places. So like I was thinking, all right, $7 minimum. We'll get a little bit of the A5 Wagyu and some of the sushi you go with. No, it was like 6 bottles and it was all gone. And then it was just painful. It hurt.
I don't know why you guys left this big, beautiful Airbnb to go to a club.
I don't know. We had a good time, but it was tough. That's just Vegas.
Interesting. You can go to anywhere you want. If you want to eat Asian, we did foot massages, Chinese foot massages while we were there, which was great. But if you want to do Asian, you can do that. You want to do Italian, you can do that. You want to do American. There's a restaurant or a theme for every single buddy. This is not a commercial for Vegas. It's an interesting place to go.
So it's totally unlike Schuylkill County.
It is. Yeah, I think so. So when I go back to the electric truck, obviously batteries are going to be the future if we're moving to electric. Right, wrong, and different. That's the reality of it. There was an article this week in Earth. I don't know if it's a magazine anymore, but it's certainly a website. There was a massive find in Oregon of lithium, which is one of the main components used to make electric vehicle batteries. Apparently, there was a volcano there, and I'm not talking about Mount Rainier in Washington or anything like that, but some type of mega volcano hundreds of thousands of years ago, and they've recently discovered that there was all this lithium trapped in these flows, and it couldn't get out. And so underneath the ground, they're estimating, initial estimates are saying there's about $1.5 trillion worth of lithium at today's prices.
I'm sure it's just far out enough that it's in international waters, so it's probably
no, it's in Oregon.
It's in Oregon.
In Oregon.
I was just reading about one like outside of like Southern California where it's like 4 or 5 miles out. So technically we have to abide by some level of international cooperation on it, but a massive lithium deposit that is under the ocean. And, there's been people for like 10 years optimizing how to mine it. And they've been waiting for all these permits and okays from all these things. But there's so many organizations out there that they are just they're just going to abide by the orders of the one that agrees with them and they've made the most progress with. And then there's like the other oceanic, this or that.
Well, how is it different than drilling for oil in Gulf of Mexico / America?
I think it's the same, but they've already negotiated all that. So it's like everybody knows, okay, it's like this setup when you're doing oil, you have to get permission here and there and make sure this or that, pay these things. It was interesting. Would love for that Oregon mine to pan out and us to find a way to mine this ocean. Can you
imagine if we start like there was a time period where everybody thought it was going to be, oil, the supply of oil was just going to get smaller and smaller and smaller. And then through technology, first off, drilling technology, and then exploratory technology, actually finding the oil, we found that there's trillions of barrels of deposits that are available to us. Some of them are harder to get to than others. But that whole idea of running out of oil. I mean, that's kind of a farce these days. We're not going to run out of oil. It can get more expensive, it can get less expensive, but we're not going to run out of oil. If we actually were able to extract that lithium, and we've continued to explore and find more areas in the United States where we have these rare earth minerals, instead of buying them, importing them from China, it would be a game changer to be able to get them, we'll call it homegrown.
Yeah.
Right.
I mean, that's
It'd
the
be like
clearest
winning the
national
lottery.
security risk, is being totally dependent on them for the emerging technologies.
No question about it. So that was an interesting article. Anybody out there, earth.com, I think it is earth.org. It just came out this week. It's like a lot of lithium.
Yeah.
And I've never seen a
like
lithium mine, but it's going to be big. What do we have else on the docket today? Oh, I know one American who got a new job.
Who's that?
The Pope.
Oh, yeah. Robert Prevost. Yeah, Chicago, first
Right?
American Pope.
It's a little bit interesting.
Chicago White Sox fan. Apparently he was like on camera at a playoff game like in the early 2000s.
Oh, is that right?
Yeah.
Yeah. Do you think that he was elected Pope and there's, I don't want to say a conspiracy theory, but like, I don't know how many Catholics are in the United States. I think the number has declined over the years. Do you think that instead of electing somebody from Europe, so the last Pope was the first Pope that wasn't from Europe since the 8th century. First Pope, obviously, from America. Do you think doing that was a ploy to gain followers or maybe to rebuild the Catholic infrastructure here in the United States?
I mean, I don't know if that was the actual reason, but it can serve that purpose, certainly. Reinvigorate, America's Catholics to go back to church. Remember, I told you the other day, it seems like over the last 2 decades, numbers have dwindled. I used to go in there and 80% of the pews were filled, and now it's like down to like 30%. But yeah, it can definitely serve that purpose. I know people are pretty hyped in Chicago and whatnot. Topps has made their highest selling single card ever, which was Pope Leo, and they had different like backs. It was like the Chicago skyline, like Chicago deep dish pizza, like hot dogs, like all these different Topps cards. Yeah. Apparently they sold like over 133,000 Pope cards.
I did hear that the pre-orders, they're selling pre-orders on eBay for those cards for $350. Yeah, for the Pope.
I wonder which one will become most valuable. The Chicago, because one always ends up with more value.
Sure.
Where do dish pizza?
Where do you think his first trip is as Pope? Is it going to be to Chicago?
Gotta have a homecoming. He should do that.
He should do that.
I think about John Paul when he came to Philadelphia in the 70s. Apparently there was like 1.4 million people in the Benjamin Franklin Parkway to do an open air mass there, and he was in like Logan Square or something. It would definitely be bigger than that, probably.
You know who is actually bigger than that? Lady Gaga.
Yeah, you told me about that. I was blown away.
2.4 million people on Copacabana Beach in Brazil to see Lady Gaga last week.
Pope has to outshine her. We need more than 2.4 milli.
We'll see, right? We will see. Let's wrap up here. So in the end, S&P 500 flat for the year right at the moment, May 15th today. And we just had an amazing comeback.
There's been, so many stats that obviously what we want to see when we're looking for strength is continuity over time frames on our stocks and signals, outperformance consistently. And the same thing you look for in signals is, maybe forward looking high returns. And we're getting that on several different things. You have the drawdown stats, the post inversion stats where there's volatility, but returns are good.
Sure.
Breadth thrust stats. We just had this WIG breadth thrust, which we won't get into now. Maybe next time.
Maybe next time.
But all of the 6 and 12 month forward returns on each of these, which are lining up concurrently, are very good 6 and 12 month numbers. So as long as we don't have an own goal, the numbers would say, we could be through the worst of it, and I don't think we're going to see another low.
Yeah. You don't think we're going to see another low?
Not in this cycle.
Okay. From your mouth to God's ears. All right, everybody. Thanks so much for listening. Don't bet against America. See you next time.
The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly.